Deep cuts on the Lal Street. Nifty snaps a 6-day winning streak due to weak global cues. Midcap see sharper cuts.
Days after MCX got a nod to kick off trading in electricity derivatives, the National Stock Exchange too has got the regulator's approval to enter the segment, upping the ante in this promising space.
Asian Paints traded higher after shares worth over 7,700 crores changed hand, while Eternal traded marginally lower after a block deal. MapMyIndia, on the other hand, slipped as 28 lakh shares changed hands. Hello, you're watching Markets Forward. I'm Ekta Batra and with me is Reema Tendulkar. Well, it turned out to be a session which was definitely weak. We saw more weakness seep through in the second half of the trading session, with the Nifty slipping around 250 odd points and the mid-cap index down around 1.6%. Not to mention that we have tragic national news to reckon with today as well.
Indeed, very, very tragic and somber news with the Air India bound plane for London with 242 people on board crashing near the airport. Just after taking off, the pilot had made a mayday call before the crash. The plane was a Boeing 787 Dreamliner, and here is the latest from Ahmedabad.
अहमदाबाद में जो प्लेन दुर्घटना हुई है वो अहमदाबाद के मेघानी नगर विस्तार में हुई है। आप सीधा देख रहे हैं कि ये टॉप एंगल से आप सीधा देख रहे हैं कि यहाँ करीबन 30 मीटर के अंतर पर ये घटना है वो पूरी आपको दिखाई दे रही है। हालांकि यहाँ से प्लेन है वो टेक ऑफ कर रहा था और वहाँ ही ये दुर्घटना हुई है। हालांकि वहाँ हॉस्टल का जो विस्तार है और स्थानिक लोगों ने जैसे भी देखा, अभी भी आग जलती आपको दिखाई दे रही है। करीबन दोपहर को ये वारदात हुई थी जहां से प्लेन टेक ऑफ करने के समय पे जो क्रैश हुआ था। करीबन उसमें से 200 से भी ज़्यादा मुसाफिर है वो सवार थे, अहमदाबाद से लंदन की ओर जा रहे थे और वहीं पर यह घटना हुई है। हालांकि देखा जा रहा है कि फायर की टीम है वो जहमत उठा रही है, आपको कंट्रोल करने की जहमत उठा रही है। हालांकि इस बगल में ही सिविल अस्पताल आया हुआ है और सिविल अस्पताल में सभी लोग को वहाँ ले जाया गया है, उनको वहाँ सारवार के लिए ले जाया गया। स्थानिक लोगों ने जिस तरह से ये पूरी वारदात देखी थी मेरे पास जुड़ चुके हैं, उनसे बात करेंगे। आप कहाँ थे, कहाँ देखा था और कैसा ब्लास्ट हुआ था?
जी हाँ, एक्चुअली हम यहाँ पे आश्रम 1 में ही रहते हैं, जो एक्चुअली वो फेस उसका सामने ही आता है। तो पहले तो ब्लास्ट हुआ और बहुत बड़ा वाइब्रेशन आया, बिल्डिंग पूरी हिल गई थी। तो मेरे बच्चे वहाँ पे खेल रहे थे, तो मेरे को लगा पहले भूकंप है, तो हमने बच्चों को पहले साइड में कर, हमने ऐसा सुना कि भाई चलो भूकंप आया है, लेकिन नीचे जाने लगे ना तब पूरा दूसरी बार ब्लास्ट हुआ और बहुत बड़ा अग्नि का गोला हमको दिखाई दिया। तब कुछ पता था कुछ विस्फोट हुआ है। फिर नीचे गए तब पता चला कि प्लेन क्रैश हुआ। यहाँ से बहुत ज़्यादा भी नहीं, 100-150 मीटर ही है, वहाँ पे प्लेन क्रैश हुआ था और बहुत सारा सब धुआं हो गया था पूरा आसमान।
Well, it looks like the market was also in a bit of mourning with this kind of news. Benchmark indices ending with a cut of about 1%. The Nifty ending at 24,888, 250 points lower. The intraday low on the Nifty was 84,825. So we managed to recover, but still ending with a deep cut of about 1% on the benchmark indices. Mid-caps underperformed. The mid-cap index was down 1.6%. In terms of the big losers, they came from the capital market space. The Nifty capital market index was down 3%, under pressure for the second successive trading session. PSUs were weak. Some of the oil and gas names were under pressure following the big spike that we had in crude prices. Brent crude prices went up to $69 per barrel. So you had many of these oil marketing companies weak in trade, realty, autos, defense, all these sectors weak in trade.
Well, yes, absolutely. We had the markets which were under pressure today. In fact, the Nifty slipping below 24,900. The mid-caps did underperform in today's trading session, with the advanced decline ratio ending at around 1:3 on the National Stock Exchange. What was probably a little resilient were a couple of the IT as well as healthcare and pharmaceutical stocks. So Apollo Hospitals, LTI, Mindtree, Dr. Reddy's managed to buck the trend and end in the green. But overall, a weak session. But on to our first segment of the day. Hormuz joins in now from the big wall with the top movers and shakers of the day. Hormuz, over to you.
Typical expiry-related session, right? The index ending at the lows of the day and not much help coming in from the banking index either. Take the top drags on the index day in terms of point contributors. L&T was the top contributor towards the downside in today's session. Infosys, M&M and the private majors like Axis and ICICI Bank also contributing to the downside in today's trading session. But the newsmakers were plenty of them. Map My India, after the block deal that took place earlier in the day, ending 10% lower. It'll be interesting, and also at the lows of the session. Paytm at one point was down 10%, saw recovery in the early part of the session, but then again that recovery was sold into 7% lower on that stock. The OMCs, HP, BP and the others as well falling after the spike in crude oil prices overnight. Tanla Platforms, of course, third share buyback in 5 years now on Monday. The stock ending 8% higher. Profit booking continued in a lot of these capital market names. Second day of losses for BSC, ending 4.5% lower. CDSL, CAMS, Angel One, all of them seeing losses of anywhere between 3 to 6%. The hot themes of the last month, railways and defense, also continued to be under pressure in today's session. Be it the railway names like Wrights and Ircon, be it defense names like Garden Reach and Mazgaon Dock, all of them seeing losses of anywhere between 3 to 5%. But amongst this sea of red, there were also some stocks that bucked the trend in today's session. Nava was one of them. Rainbow Children, RHI Magnesita, another record high for Eris Life Sciences, ending 4.5% higher in today's session, and Reddington too having a good day at the office, but some green, but predominantly a session that was marked by red.
Indeed, thank you very much for that, Hormus. Mayuresh Joshi, Head of Equity Research at MarketSmith India, and Richard Jain, Motilal Oswal Financial Services are now with us. Richard, let me start with you. We were consolidating for the last two trading sessions, fairly directionless, but now we've taken a step down. Do you see more weakness in store? What are the charts telling you about the near term, tomorrow's trading session?
Yeah, hi, very good afternoon. Well, in last 2 days itself, the market breadth gave some signs that a short-term profit booking could be there. As in yesterday and day before yesterday, the market breadth overall was marginally in favor of declines. Now, one thing is that if you look at the broader markets in the Nifty Midcap 100 Index, in last 2 months, we have seen a rally of exactly 10,000 points from the low of April, where what we have seen. And in percentage terms, that comes to about 21% from the recent swing lows. So when an index gives a 21% up move in just 2 months, you cannot expect that to keep repeating going ahead. So I think one pause was needed. So and this is the pause that we are witnessing. Although the broader trend remains positive, but a short-term consolidation or a pullback move further towards at least 20 or the 50-day moving exponential moving average cannot be ruled out. So positionally, Nifty immediately has a support around 24,800. Followed by positional supports around 24,500 to 450, where recently we have seen markets making a strong support base. So I think for next more 2 to 3 trading sessions, we would see a kind of consolidation or pullback move in the market. But rather than overall, this remains buy and dip market, where in case the index dips towards that support again, that should be used as a good buying opportunity.
Okay, all right. Mayuresh, wanted your thoughts with regards to a stock such as Asian Paints, where there was a large trade that took place today, but it did manage to go home with a gain of around 0.5%. How would you approach it? And, just an additional piece of information, it's down around 2.7% for the year.
Afternoon, Ekta. I think two things. One, I think the underperformance has been pretty stark because of competition, because of pricing related issues, because of slower demand, which reflected in lower volumes. And therefore, I think numbers obviously had lagged for Asian Paints. Now, a large part of the expectation is with consumption expected to come back, specifically urban and semi-urban consumption, the growth that can come through in terms of volumes, which typically are 1.5 to 2 times of the GDP. The expectation is 10 to 12% volume growth for the industry as a whole. And at the same time, I think the competition has now probably settled in as we speak, as far as pricing is concerned. And therefore, with demand coming back, the 75,000 crore decorative market, where 25% is still unorganized, there is still huge scope of growth expected to come through. So there are sufficient levers in the second half that the street is probably looking forward to. Expectations of volumes coming back, pricing coming back with demand coming back to a certain extent. Input costs are relatively benign, and therefore margins should be relatively better in the coming few quarters, which gives some hope in terms of the valuation matrix as well as earnings recovery. So I think Q1 might be tough, but expectations is that second half there should be a decent earnings recovery if all these factors are coming together and put at play.
The stock has also gone through a long period of time correction with the competition, Birla, Opus, etc., the margin pressure, weak demand. I think in the last 3 years, the stock is down close to about 20%. But let's talk about the entire exchange space. Days after MCX got SEBI's nod to kick off trading in electricity derivatives, the National Stock Exchange too has got the regulator's nod to enter the segment. Vamakshi is here to tell us what this entry means for NSE.
Well, Rima, NSE has received SEBI's approval to launch monthly electricity contracts, and this is for the futures market. After this, it has become the second exchange to get the nod after MCX got its nod earlier this week. Now, keep in mind that last month itself, SEBI had already granted an in-principle approval to NSE, and the company had also confirmed this in a con call that was held after the fourth quarter numbers. They had also added that NSE has an advantage over other players in this market due to its advanced technology. They had also said that they are well prepared in terms of other requirements in order for introduction of electricity contracts, like large pool of settlement guarantee fund, which is the SGF. Now, this approval was largely expected to come through given the in-principle approval that was in place earlier. But however, for MCX, this is a sentiment negative as, there could be some competition coming in from NSE on this front. So therefore, NSE, on account of that, we had MCX under pressure today.
Okay, all right. Well, Vamakshi, in fact, stay with us. Shares of 197 Communication of Paytm, the parent company of Paytm, slipped in trade. This comes after the Finance Ministry clarified that it does not plan to levy merchant discount rates or MDR charges on UPI transactions. Tell us more about this and the implications, Vamakshi.
Well, Ekta, there was speculation going around in the market with respect to the MDR, and in fact, the Finance Ministry has come ahead and clarified that there is no plan to levy MDR, that is the merchant discount fee, rates on UPI transaction. Keep in mind that this is essentially the fee charged to merchants for accepting digital payments, which is usually a percentage of the transaction amount. Currently, there is no MDR in place for UPI payments as well as RuPay debit card transactions. But if this would have come through, it would have been positive for Paytm, given that it could help the company more effectively monetize its payment gateway. In fact, UBS also says the same. They have a neutral rating on this counter, target price of 1,000 rupees per share. They say that a delay or non-introduction of MDR is sentiment negative for Paytm. In fact, they were building in 1 basis point contribution to Paytm's net payment margin from either introduction of MDR or increased incentive as compared to the budget. Given the absence of both, they're expecting a nearly 10% downside risk to the adjusted EBITDA estimates for FY26 as well as 27. So resultantly, we did see the stock under pressure today.
I think at one point of time, it was the biggest single-day fall in Paytm share price since February of last year. Ruchit, 900 on Paytm, just last year, in May of last year, the stock had gone all the way down to 340, 350. So from there, it's managed to recover quite swiftly. It's still nowhere close to its all-time high levels, but, what is the chart telling you? Is there a trade?
So it seems that there would be a broad consolidation phase, at least in the near term in the stock. Today, we did witness a gap down opening in the stock post that news. But even after gap down opening, we have seen a huge volume-based selling happening over there. The volumes are quite higher than the average. So generally, whenever you see volume-based selling, the stock tends to go through some underperformance. The major support for the stock, which is around 200-day moving average, is placed around 780 to 800 kind of range. So I think broadly we could see some time-wise corrective phase in the stock, and along with the markets, if we see any such low levels around 800, 820, then the risk-reward ratio could become favorable to take some counter trades over there.
Okay, all right. Well, now let's shift our focus to the auto sector. Maruti's management said that it will not delay the launch of the e-Vitara amidst China's curbs on rare earth magnets, as there has been no disruption in the production of the model. Recently, the auto major had trimmed its output target for the model till September. Listen in to what Rahul Bharti, who's a senior executive officer of corporate affairs at Maruti, had to say on this.
Regarding the situation on rare earth, as of now, there is no disruption in our operation due to this issue. There is, of course, a lot of uncertainty, and the situation is evolving continuously. So we are monitoring the situation, and we are pursuing multiple solutions to ensure continuity in our operations. The launch timings don't change. If and when there is any material impact to our business, we'll come back to and we'll inform all shareholders or all stakeholders in line with the regulatory requirements.
Right. But the production numbers have not been impacted. You're saying the launch timelines are not delayed, but are the production numbers not impacted at all?
There is no material impact. See, small changes in production schedule keep happening all the time across several issues. If there is any material impact, we'll come and share.
Okay, that's the management of Maruti. Mayuresh, have you looked at the stock? Down around 0.5% today, but in general, with regards to this rare earth magnets issue?
I think the management had put forth a statement that the Vitara volumes might go down from a short-term perspective, but they're expecting the annualized numbers to probably hold up as far as the Vitara sales are concerned. Then obviously, I think one expects more launches coming through as far as the EV platforms are concerned. But there has to be some absolute clarity in terms of these EV magnets. The Commerce Minister yesterday also was mentioning that we should also be looking at some alternate supply chains. Unfortunately, China dominates the entire rare earth magnet market as we speak. And therefore, I think how the EV space will evolve. It is still a very, very small component as far as Maruti is concerned in terms of both its offerings, volumes, as well as a percentage of its top line. And therefore, I think the expectations in terms of its core business, how it fares, what's its expected to in terms of numbers is something to be watched out for. As far as ratings and rankings are concerned, it's a whole. But we continue holding M&M in both our local and global portfolios.
Okay, so the preferred bet in auto is M&M, Mayuresh.
Yeah.
Okay, any auto ancillary that's a part of your portfolio?
Nothing that we've added currently, Rima, but I think both the battery makers is something that we've kept on our radar. Our take is that the disruptions that are getting created, not just in terms of the lithium-ion batteries, but the technologies evolving around the same in terms of the ecosystem, are very, very interesting as we speak. Obviously, the developments that both Exide and Amara Raja are doing as far as the battery ecosystem is concerned, without creating too much of stress in terms of balance sheet dynamics, is something to be watched out for. And again, I think with the technology that they're probably deploying, the expectation in terms of not just the OEM market, but also the replacement market by sheer capacities that they might just possess, and expectations in terms of the alternate dealer and distribution network that they probably carry might be a huge addition. So nothing as on date that we carry in auto hands. But I think these battery makers are something that we are very, very closely monitoring.
Rushit, any auto stocks that you like technically?
I think Nifty Auto Index seems to be still to be in a consolidation phase, but a couple of names have started showing a relative outperformance within the sector. One is Hero MotoCorp, where post a decent underperformance over the last few months, the stock has started forming this high top, high bottom with good volumes of late. So I think Hero Moto is one stock which looks much more positive. M&M also, I think, more from a bit mid-term perspective, it looks more of a buy and dip strategy. One can keep when it declines towards 2950, 2900 should be used as a buying opportunity. So overall, I think the sectoral approach seems more of a consolidation one. But within the sector, Mahindra and Hero MotoCorp seems to be better placed.
Mayuresh, a lot of experts are also talking about consumer making a bit of a comeback. One, because last year's the budget cuts are now trickling in, and plus we've got that RBI boost. Which would be your preferred consumer play?
So I think it's a very broad basket, Rima, honestly. And I think within the consumption basket, within FMCG as an example, I think Marico is something that we continue preferring and liking. Numbers had been good in a quarter where I think most FMCG companies struggled with both volume pricing as well as absolute bottom line growth. And Maruti probably was a tad bit better than most players and peers within this subsegment itself. So this is one stock that we continue preferring as we speak. Alco beverages as a space, Radico is something where our own belief is, irrespective of what happened in terms of the Maharashtra government ruling yesterday, should continue faring well over a longer period of time. And again, I think a few apparel makers that we've got on our list as well. Apparel makers that are more attuned in terms of tier 2, tier 3 cities. There are our own senses that as consumption makes a very, very strong comeback, what we've historically seen in the past is that as these consumption trends start picking up, a few of the stocks which are attuned towards these areas. So a couple of stocks that we probably got on our radar within the space, V-Mart Retail, Vishal Mega Mart as an example, are absolutely well placed. And what you've seen historically in terms of consumption patterns, if that does play through, I think the mix that they've probably got in terms of apparel, non-apparel, FMCG, and the pricing at which they operate, both the stores as well as expectations of margin performance going ahead, I think they can become very good, interesting stories in terms of consumption making.
You know, Marico had held an investor meet just earlier this week. Nuvama had written about it, and they said that they're targeting a top line of 20,000 crore by FY30 compared to 10,800 crore that they clocked in last year. Lots of focus on D2C brands, digital first kind of brands, but almost looking to double the top line.
Okay, well, that's on Marico. That's stock down around 1% today. But as of now, we'll take a short break. Up next, we'll get you the top corporate voices along with the key market events to watch out for.
Welcome back. These were some of the big corporate voices that we had today. First up, Tata Power Management has reiterated its commitment to cater to domestic demand for solar cells and modules. The management added if it sees export opportunities, it will consider, but the levels will not be very high. On power demand, the management said it was affected due to the rains in the month of May, but it is confident that India is unlikely to face challenges in meeting peak demand. Further, Tata Power is eyeing more evacuation and distribution opportunities and said it is growing rapidly in rooftop installations.
Next up, VCV management said the rare earth magnets issue is for the entire industry and it has rare earth magnet stock for 3 months. The management also stated that there have been positive trends in the industry with anticipations of a single-digit growth for the industry in FY26.
And before we wrap, let's get you the key market events to watch for tomorrow. Ria joins in.
Well, yes, let's take a look at the key events to watch out for tomorrow. On the global front, we have the industrial production data coming in from Japan. For both Germany and France, the CPI data will be coming out. And also watch out for the trade balance data coming in from Europe. Apart from this, ECB's Elderson is also set to speak tomorrow. Coming to India, we have the trade balance as well as the forex reserves data coming out tomorrow. Apart from this, the Gen AI ML conclave is going to be happening in Bangalore tomorrow. And Japan's trade negotiator is going to visit the US for their 6th round of talks.
Okay, all right, Ria. Thanks very much for that. And on that note, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates on the other side. Stay tuned.